Let me know when you're ready.
All right. It's funny how that gets, like the biggest streaming platform, and it gives people the biz.
Hello?
Hey.
Yeah,
Hello.
I just jumped in to say hello, but
Oh,
I'm
right
gonna
on.
leave.
Yeah, we haven't officially started yet, so we're
Oh, okay.
just
Have you
troubleshooting.
It's
tried?
all good. Welcome.
Yes, I did. Have you tried Zoom before?
No, I'm streaming. We're streaming live right now.
I know, but
Go back.
Zoom you
Go
can
go
stream.
back into the audience. Almost done. Let me just double check one thing. Cartoon. Yeah, it's giving me the business. So okay, go ahead and take it away. I'll try to troubleshoot this on my end. So, yeah, thanks for
All
joining
right.
us, everybody.
Sort of. Not. I don't want to call it support, but you've got what you can consider compression or pressure pushing on this level from this area, and it means that when price gets down here, it is met with boring rejection. I don't know how else to put it, but that's the best way to describe it. Is this is a little bit of support, if you want to call it that. So therefore, we can be bullish on the week. And looking at the daily chart, it's been a mess, but the moving averages are holding, and you're getting a tiny bit of that squeeziness going on. And then if we look at the par, which I shouldn't really be looking at the par on the daily chart except for the biggest time frames. So I'm going to go into my par settings. This is our custom indicator that we have inside the Cartoon Money Printers private Discord. And Mickey, are we still doing promo time on that?
Yeah, yep. Cartoon Money Printers. If you go to cartoonmoneyprinters.com, hit the Start Now button, you can get 90 days free access to try out this indicator and see if it's to your liking.
Look at this. We got on basically all the biggest time frames. We've got a bullish divergence from here to here on the daily chart.
Do you want to
So a divergence.
Can you draw it out for people that?
Yeah, let me draw these out. Let me draw it out. Y'all will appreciate. You draw divergences from the close, by the way. So this close to this close. Oh no, it's brought back all my other stuff. Let me throw this in a folder and hide it for you. Let's see here. This is how OCD things get. We will bring this back later. But we've got a bullish divergence. Oh, I already drew it on there from the other day. I'll delete that one.
But you didn't do it on the par.
Yeah, I didn't draw it on the par because I was using my own code modified underlay indicator that shows the squeeze and momentum. That's a pretty standard indicator that is publicly available. Let's see, one more group.
Today's lesson
this is clean.
How
This is
to
clean enough.
organize your layers.
Oh yeah, well no, here's the organization.
Yeah.
1 minute structure, 3 minute structure, 5 minute structure.
Yours is phenomenal
yeah.
compared to mine.
I've got God lines. Let's see. I haven't checked the God lines in a while. Oh, there's one way up here. There's a God line. Man, we're far away from it. But here's the thing. On the daily chart, it's holding up against these moving averages, and we've got a pretty nice bullish divergence on You can see it from the blue, the red, and the purple. So all of these time frames, I'm just going to draw it smashing through the middle of all of these. But this is a 3 different time frame bullish divergence here. So here's what you want to look at. Close to close on these lows. That rhymes. I guess that's a good way to remember how to draw a divergence. Close to close on the lows. But a divergence is good for, say, 10 to 15 candles at least, which means for the next 8 or the next 2 weeks, maybe even, we could possibly expect price to hold above this general low area. Okay, I'm not going to say it's shooting to the moon. I'm not promising 70K right here, but I'm saying that this divergence can play out, can be valid for 10 plus candles. And we're already 2 candles in, but anyways, that's great news. Let's jump to the 4-hour chart and we'll see how we're doing. This bull div ended right there on that low. This 1-day fair value gap got completely just blasted through, leaving a fair value gap on the 4-hour chart. So that's going to be a point of interest. Let's come back here and show this again. Yeah, here's our 4-hour market structure. Wow, got to update that. So on the 4-hour, it blasted through this and created a whole new fair value gap. Did I draw that yet? Yes, I did. And this will be a point of interest for a long retracement on a retracement, because we've got no market structure aside from this massive bullish displacement. And that's usually a sign that if you sit around here waiting for your range, I just love using my presets for all the drawing tools. If you sit, so here's what we're looking at. Equilibrium is all the way down here, and discount is below equilibrium anywhere between here and here. But right here, that discount where I labeled it is the 618 fib, which is my favorite place to look for trades if it aligns with something else. But this is just clean candles moving up here. This is the only real gap here. So this is what I was looking at earlier. Because of how strong this move is, just utterly trashing this 1-day fair value gap and blowing right through it, I'm going to say, hey, you know what? There's got to be a ton of liquidity waiting here. This counts as an inverted fair value gap, I guess. So this is a rare occasion on which, at least according to the 4-hour chart, I might take a long in premium, which is a no-no. But if you jump down to the 1-hour chart, you can see, I'm going to hide my moving averages and all that stuff so we can see better. Here's where the 1-day fair value gap got blasted. And this is where the 4-hour fair value gap got created. So here's what we're working with. Oh, I got a whole bunch of 15-minute market structure drawn. Let's see. Yeah, there's 1 hour, 1 hour, 1 hour, 15-minute. I'll leave that up. It's relevant. There we are. So this is 1 hour. This is a 1 hour low. And that lines up perfectly with the 4-hour fib of discount in the 618 fib. So because of that, oh, that bear div did not play out. That got smashed. So here's what we're looking at. We've got, see, I bet this is the 1 hour. Yeah. So right here in the middle of this 4 hour fair value gap is our 1 hour discount. So even though it is in premium on the 4 hour chart, I would take a long risk anywhere around here between, let's label these numbers for anybody.
Yeah, I mean, this whole like
Price
dip
note.
down below 60K, like that seemed like somebody pushed it there, and then it was immediately gobbled back up.
Yeah.
So I didn't
And
see
you can-
any
let's-
liquidity that was swept there. Like there was no point of interest. I mean, it bounced right off the daily order block.
Well, look at the volume. I'm pulling up the volume now. Let's see. That's just, look at that hammer. This is just gobbling up. This is a huge spike in volume. And I'm looking at the Coinbase spot chart. So the volume numbers here are 1.4, 1.6, and 1.3 thousand Bitcoin. So we've got approximately at least 4 Bitcoins, no, at least 4,000 Bitcoins traded in these 3 candles.
Mm-hmm.
How much is 4,000 times 60-ish thousand? A lot of money. So who is packing their bags here? That's what you have to ask yourself. And then you look forward and say, okay, if some big players packed their bags here, look across for the next big gigantic spike, because these people they're taking profits. Anytime, so here's how I look at volume when I'm trading based on volume to kind of help me look at highs and lows. I look at this high from where this candle started and volume really went nuts, and I say, okay, somebody's got millions of dollars that they are in massive profit above this level. Let's draw it out. I'm going to price it out. Or I'll draw it from the high because that's actually the most valid. So above $60,398, some millionaire somewhere is making a ton of money. And they are going to take profits. And sure enough, you can see as soon as we get back above this 4 hour high, that's this candle right here. And it spikes. So that's where your volume starts. They're probably mostly buying to rally it up here, because obviously these are all green candles, but you can see that there's some wicks. So that means people are starting to take profits. But where's the selling? There's not much selling yet. This is still a giant green candle, giant volume, but small green candle. So it's not, price isn't moving much, and you've got a great wick. So somebody's taking profits here, but honestly, whoever packed their bags here is probably hoping for higher. That's my conclusion, okay? So that's why I'm bullish overall, and I am saying that right around this level, below 61,824 is where you're in discount on the 1 hour. You're in the middle of you're right at the 50% of the 4 hour fair value gap. So drop that down to around here. That's your range. 61,678. I'm going to take a long if price gets down there and we see what we want to see on the par. Now let's look at some other coins, because speaking of, let's see what we want to see on the par, we've got some crazy pumping altcoins today, and I wanted to look over them and just kind of assess what is possible. Oh, hey, that trade is going. That's nice. Let me see where my, hold on, let me pull up my phone and see where my entry is. Mickey, how we doing? Are we looking good?
Yeah, we're looking good.
Yeah, right
I'm
there.
looking up options expiry.
So this might get stopped out. I always have to say that because I just try to remind people like, hey, nothing's guaranteed. But this ENA pump got massive movement up, and there's an enormous fair value gap on the 1 hour. And I'm going to aim for that. That's a 3.5 risk reward. Not bad. If I'm not mistaken, this is a previous level on ENA. Yeah, it's a support resist kind of flip thing. So it could go up higher, but historically speaking, it's been support in the past. So I'm going to draw a liquidity box from, let's say, right around here to this zone. Drag that across. And then I want to remind myself that this level is not an exact level. So I have heat map level, and that just means it's a liquidity zone. All right, so what this means is it'll probably shoot up into my stop loss. Dang it. But it zapped it, and we're getting some signals on the par. So this is worth a short with the 1 hour just absolutely maxed out here, and then not maxing out, giving a divergence here, bearish divergence there on the 15 minute, 30 minute, and the 60 minute. While the blue one here is the 4 hour, it's also in extreme overbought, but it hasn't rolled over yet. So that is a bearish divergence. Not really that impressive though. It is Friday night, so things like to just go wild. And here's the deal. I would look, if this gets stopped out, I would look for another short right up here. Say it goes like that. Or if you have the liquidity, you can just do your stop loss up here. And oh man, I hate it when price is right at the entry level and then this drawing tool goes blank. So yeah, you could target a 1.8 risk reward ratio. That's acceptable. Oh, that's so annoying. That's going to drive me nuts.
No.
But anyways, that's a trade that we're thinking of. But it's also the higher time frames could possibly. I'm going to hide the 1 minute and the 5 minute because that's not really useful unless you're really good at scalping. Yeah, these biggest time frames, the red and the purple, which is 720 minutes and 1440 minutes, those are still just barely popping up above the midline. So again, this is a great opportunity for a short, but it could get along like this. I'm just going to brutally destroy my trade here and go like that and then go like that.
Yeah. I mean, it is creating an upwards channel. I forget what the if you're a pattern trader,
Ascending rising wedge.
a rising wedge.
Yep, you were right. This is a rising wedge, and I hate drawing traditional patterns, but they are useful when you want to
Oh, Jesus.
understand what retail traders are doing. I'm going to change this thing because it looks... I'm going to hide that too. That's kind of annoying. So we'll see how that plays out. But the main thing is we are starting to get short signals that could be valid. And I was doing this based off of the Discord watch list or alert bot that we have for this indicator, where it says, hey, a bunch of stuff is oversold or overbought, and it just rattles them off every few hours. We got a notification 6:28 p.m., 6:13 p.m., 5:58 p.m. It's just gonna give us alerts on which ones of these coins are getting all these different time frames up into the
I want to
in the
give
top
you
or
guys
down at the
an
bottom.
update on that. We have decided to format the bot to a swing setup. So that's what we'll be looking for with the par alerts bot. But my coder is going to be busy for a while, so I'm not going to get it done. The settings changed till maybe after the holidays. But we're looking for swing setups now with the par alert bots, and that'll be RSI of the 2, 4, and 6 hour. When those are all in the same conditions, then it'll give us an alert.
Yep, I'm loving it. And it's just like, I mean, signals, in my opinion, should be automatable. You should never pay just to have, or I should say, you should never have to put in too much hard work to create a watch list or check a gigantic watch list. This is such an automatable process this is what technology is for. It just scans everything that's popular and just tells you, hey, check out these coins. And honestly, there's always a few coins that I'd like never heard of before, and I'm like, oh, what's this Myro coin? Better check that out. Because I'm an old guy, I'm not able to like constantly be ear to the ground listening to hear what the latest hot meme coin is. But this thing is great. It just tells me, hey, you got this one crazy popular coin that's just going to the moon, and it might give you a short soon, which is exactly what we're seeing here. Look at that. The 1 hour and 30 minute just absolutely maxed out, 15 minute as well. You can see it in the legend here. This is 15, 30, 60. And so you've got all of these highs that are creating a possibility of a divergence, but they haven't flipped down yet. So I need to customize this, but what I usually do is I go into the text and I go like this. And and then I just watch, and you can double click on this to maximize it and say, hey, you know what? The 30 minute is the white and the 60 minute is the yellow. And you can change the colors and whatnot to be whatever you want. I like to make the 60 minute a little bit chunkier. And so what I'm looking for is this flip, and it actually looks like the 30 minute has stayed below the 60 minute. It's hard to see right now because I want to wait for one more candle to close on the 1 hour. But it looks like it could be giving a divergence. There's a gigantic gap of this whole indicator down below. Kermit, the founding father of this indicator, loves to do this. Oh, hey, you got a massive empty space here. Oh, I didn't do an oval.
In the server, that's a colloquial R gap.
So, do I have a par gap? No, I don't have a par gap.
Oh.
Okay. All right, we're doing a bearish par gap setting right here. And does it have text? Yes, it does. In case the red didn't tell you that you need it to be bearish.
Fantastic.
So I don't like how the biggest time frames are still aiming upward, but I do like how they are pretty much at the top of their oscillation. And again, this is a great situation where, you know what, let's just see what we got and maybe take a short. If what and I like to use market structure to keep me out of over trading. So what I'll do is I'll say, hey, I'm not entering a trade on the 5 minute until I see a break of market structure, which would be this low right here. Draw that in and put the 5 minute market structure. See how it's pumping again. These pumps get fueled by stop losses towards the end of their pumping. This is not all people FOMO buying. People are not that dumb, or at least some people are, but you've also got people trying to short the coin. People are that dumb. So people are dumb one way or the other, but
okay,
you want to wait for price to be not just being like, oh, it's really oversold. Oh, I've got a short signal. You know, it's bearish divergence. And then you go short right here, bam, you're look at this thing just ripping up. Like, you don't go short until it shows that it can blast through a support level. You can call it ICT, you can call it whatever you want, but until you can blast through a support level and be like, no, we're going down, there's no reason to get into a short.
Mm-hmm.
Like, 1 or 2 years ago, I would have been just YOLO shorting right now. And I'm sure there's people out there who are like, this is crazy, it's way too high. We went over this last Friday. Like, what do you think emotionally when you see this chart going off like this? You probably think, oh my gosh, this can't go on any longer. Well, I got bad news. It absolutely can go on much longer. This pump is not even that crazy. And that's where we're gonna combine traditional ICT and our custom in-house indicator to say, all right, once this gets smashed, or maybe another one will form up here, and we're gonna have to have a whole nother thing up here. And then once that's support level gets smashed, then you YOLO your short. All right, Mickey, what were you gonna say?
The options expiry are fairly interesting. Let's see here. On the 14th, we're looking at max pain at 61,500 on Biddy, and that's small. It's only 54 million. On the 18th, it's at 62, and that's an 800 million expiration. And then on October 25th, we're looking at $3.7 billion at 62. So I have a feeling that Biddy's going to waffle around here for the next month.
62?
Yeah, 62,000.
On October what?
25th. 25th and 18th.
Yeah, price is going to want to hang out at this level. You're right.
The next big one is December 27th, and that's $5 billion worth, and it's at 60,000.
Oh boy, those people are not going to be happy.
Yeah.
I I don't know what's going to happen in December.
It's so far in the future. Why would you place an option that, like, I guess it's expired. So
Can the price move between now and then?
yeah. I'm just
That's how it works, right?
if Max Payne is, if price gets to that point at this expiration, they will be completely their options will be completely liquidated. That's why they call it Max Payne.
Okay. Yeah, so the Max Payne level is it's a thing to watch because you have to assume the worst and assume that there's some money grubbing millionaire out there somewhere who is trying to destroy everyone. They may not succeed, but you have to assume the worst and be like, okay, if I had tons of money and I was greedy enough to just destroy everyone else, could I manipulate price to get to this level? And whether or not that happens, it gives me the mental reminder, like, hey, be careful. It could get all the way down to that level. You know, say we get to $69,000 or $68,000 over the course of the next few days or weeks or month. You have to not get emotionally attached to, all right, next is all-time high. Because then you're just going to be long. And it may you have to remind yourself, hey, it could get back down to 60K or 62K or whatever. There might be somebody somewhere out there just going bonkers with millions of dollars, trying to push price against my naive bullish sentiment, you know, in your whatever $1,000 trading account. There's a guy out there with $10 million in his trading account.
And it's money for the taking. It's easy, low-hanging fruit. So why wouldn't they?
Yeah.
Like, oh,
I don't personally fully subscribe to ICT. I've said this before, but I love the ideas of market structure and liquidity and the thought process of we should always be assuming that the worst thing could happen, and also realize that the easiest way for big money to make money is by forcing small money, giving them no other choice but to fork over their money, which is a stop loss. That is how stop losses are how big money gets positioned, is by forcing you, whether through a mechanical stop loss or an emotional capitulation of like, oh my gosh, we're doomed, sell. Those forced situations are how the big money gets positioned and or how they exit or short, you know, whatever. So that's what you always have to remember. And that helps me avoid becoming emotionally attached to any one particular price level.
And that makes sense too, because like I said, low-hanging fruit. They know where your stop is. Why wouldn't they just take?
But they're not. Yeah, people think, oh, my stop loss got hunted. Like they saw it, and then they targeted it. That's the theory. The thing you need to understand about ICT and liquidity in general is there's nobody with $10 million is sitting there at the chart looking at your $10 stop loss, being like, aha.
Mm-hmm.
They are using the basics of market structure, highs and lows. They're using multi-million dollar algorithms or whatever they're using to just generally create that emotional condition of, oh my gosh, or I'm so sure that this is going to happen, I will put my stop loss really close, tight, under, or above this level, blah, blah, blah. Because that's just what everybody has done for a century plus, is they've either been scared or too confident, and that equals capitulation or tight stop loss. And that just hangs out. There's tons of different indicators. You can use bookmap, heat map type indicators that show you on average where tons of people's stop losses are or liquidity or liquidation levels are. There's a lot of different indicators out there. And that's just how it works. So anyways, these shorts don't look like they're going to play out just yet. I checked Myro. I checked ENA. Let's go back to ENA and see what we got.
It's bumping.
Yeah, it's probably going through my stop loss right about now. But this was a level I decided to take a risk at. I'm going to bring up my smaller time frames again.
We have a request to look at the settings. So while we're here, do you want to show your settings?
Yeah.
And these settings may be different from what Kermit uses, and he posted his settings.
Yeah, so everybody watching, if you are in the private Discord, you can access this indicator. The default settings are pretty darn good. I'm going to save as default, and then I'm going to reset, but then cancel so that you can see what the default settings are. This is what it looks like. And the way it works is we've got all these different time frames that show you all of these different minutes of RSI so that you can look at whatever minute chart you want and still get all of this information. So most RSI or other oscillating indicators, they just adjust to whatever your chart is at that time. And so if you want to see the information from the 15-minute, you got to switch from the 5-minute to the 15-minute. Here, you've got 1440, which is 1 day, right? You've got 1 day all the way down to 5-minute. I have this set. I'll make it Control Command Z so I can go back. I have this set to 1 and 5, and then 15, and then 60, 30. The 30-60 is a very common, useful one that we love because the 60-minute RSI is a great indicator, and then the 240 is the 4-hour. 240 divided by 60 is 4. Good old elementary school math.
Each one of these are minutes. They're indicated by minutes. So a day is 1,440 minutes. So you can do any customization that you want to do for any parameters. Some people like trading the 3-hour, some obscure time frame. The 6-minute. The 6-minute.
And what I really like about it is you can create the ribbons in between any of the adjacent options. So is it, RSI ribbons. You can create a ribbon between any two things, 1 and 2, 2 and 3, 3 and 4. So whatever things you want to have pair up and be more easily visible, you create a ribbon in between it. And so like here, I've got 4 and 5, which is the 30-60. And I'm going to dial it down just a little bit. But that lets you just see this overall situation a little better. And you can see the divergence really clearly. And you know that it's a divergence for both the 30 and the 60-minute. And then I think I also had a 15-minute divergence here, right? Yep, so there we go. I like to make some of them thicker, and I'll do that later. You can see this is the 15-minute, the 30-minute, and the 60-minute, all giving a divergence, and I don't have to leave the 5-minute time frame to see all this info. That's what I love about this. And I changed all my colors because I like color coding things that give me a little bit of a reminder. I made the 1-minute and the 5-minute time frames red, orange, just to remind me, like, hey, this is not the best, this is danger zone. And then I just went down the lines. 30 and 60 are yellow and white, and then 4-hour is blue, and then the 1 day is purple or pink or red or something. And so I just kind of went down the line that direction, and I color coded things that way. But you can do whatever you want. And I also made the oversold and overbought levels gray so that it didn't distract me from the color coding of my indicators. That's another thing that I did. I did that with my candles as well, obviously, because color is so important. But I don't want color to I want color to mean information as opposed to create an emotional reaction. You know, if you have green candles and red candles, you see a giant red candle, it just makes you that much more likely to smash the bail out, capitulate, sell button. You see a massive green candle, it just makes you that slightly more emotionally likely or vulnerable to smash the FOMO buy button and buy the top. So I went gray and white with my candles, and then it frees me up to have all of my drawings and indicators have colors where if I see a color, it doesn't give me a terrible emotional reaction. It just gives me oh, I know what that data is. It means this.
I noticed you also turn off your overbought, oversold.
Oh yeah, I only have one level on the par. You can have 2 levels.
Yeah. And those are, they can signify alerts that you can set on this. I have a tutorial video on how to do the alerts on, let me link it real quick.
So we got 8 there. So we'll go 6 here.
I'll post this in chat.
Here. So yeah, this indicator is worth its weight in gold alone, in my opinion.
Oh, thank you.
Thank you for Mickey and Kermit for developing this. Yeah, I really appreciate it. And hey, it looks like this thing's getting back into profit here. Nah, I don't have that much confidence in it. So here's what I'm noticing right now. Look at this. You've got the 15-minute. I'm gonna juice this up so we can see it better.
Juice it.
Make that a little bit more visible. What do we have here? And this is another reason why I just love this indicator for checking everything and keeping me out of trades. I say that as I'm in a trade that I shouldn't be in right now. But I decided to take a risk on this level because of the wick of this high that got rejected. Here's what I'm seeing now. This 15, 30, and 60 did give a bearish divergence for these highs. However, what do you see here? You've got the makings of a bullish divergence on the 15-minute from these lows. Right? And that is from these lows.
That's a bearish divergence.
No, this is a hidden bullish, because it's the lows are making a higher low, but the oscillator is making a lower low. This is a continuation divergence. Honestly, though, with all of these indicators maxed out, I am still content to take this risk. However, it is a thing to note where you would say, hey, you know what? Because this bullish divergence has formed, I might close some or most of my position at a small risk reward profit. Say if it gets down below this low, between this low and this low, then I might close half the position
Mhm.
and then move the stop loss in, because we have a bunch of squeezing going on here. I like to call this a squeeze block. And you can see how it has acted as support now. And so here's what we got. This could be giving a bullish divergence. And in that case, Mickey's convinced it's not a bullish divergence.
No, I love the concept of a squeeze block.
I'm just totally stealing the block concept shamelessly. Because like I said, I don't believe in the whole cult of, interbank something. I don't know what it is. And I don't really like how so many of the YouTube gurus out there talk as if they are God.
Mm-hmm.
And they always make it sound like you should be ashamed of not listening to this person and learning their one method. That always bugs me about ICT. However, I have watched the charts for years, and I see that these types of things do offer some confluence. I don't believe that there is pure edge in anything as simple as, fair value gap and displacement manipulation, whatever. It's especially now after all these years, you can tell that ICT has gotten so complicated that it's become a language that merely explains what has already happened.
So
if you draw every block and gap on just 3 different time frames, you will cover the entirety of all price action.
Yeah.
And therefore you're like, oh, well, see, this is what happened. Obviously, and you're like, well, there's 5 other gaps and blocks that you ignored, and now you're just saying this is the one that worked. Okay, fine.
So that's why I like referring to them as points of interest, and then I like zooming, doing a larger time frame, going down to the smaller ones, because I'll throw more weight behind a daily, fair value gap or an order block than I would the smaller ones. In my opinion, because that's just my trading. So some people that scalp, they can do whatever they want. But like a 5-minute order block, you're gonna have thousands of them. So here's what I was gonna say too. When it comes down to the market doesn't have any rules. The price action doesn't have any rules. And what a lot of these influencer types are doing is trying to apply their own rule set to it, but it's like trying to cage a wild animal. Like, you just got to try to interpret it and deal with it. And so that's why I like using the term points of interest, because this is a place that may see a reaction. It's not going to be like, oh, guaranteed, that's why a lot of us like to talk about confluence in all these different things. So let's just say you have an order block that fits right into a golden pocket plus EMA, like right there. Seems like you got three zones of confluence, which might signify a move or a reaction at that price.
Yeah, that's what it's all about. And we went over this last Friday in the workshop that we recorded live on the emotions of trading. And that is, everything comes down to, do you actually have an edge on the market? It can be an intuitive-based edge where you just kind of see the market better than most people, and you understand the emotional reactions of traders, and so you naturally, emotionally just kind of know how to hunt liquidity. Or it can be an edge that is much more mechanical, and you use indicators and say, okay, I'm only going to trade when things are oversold or overbought. I'm only going to trade when 3+ indicator signals give me confirmation. So you want to say, okay, I want to get a divergence on the 4 hour, the 1 hour, and the 15-minute. Then I will take a trade. The way this type of strategy has edge is you have done exactly that 100 times and you're profitable. If you've done 100 trades, but you wiggled the rules a little bit in every trade, you have nothing. You have no edge. If you followed the rules very strictly for 2 trades and you made money, that's also a really bad recipe for disaster. So you have to combine all of the above. The confluence of all the different things aligning, and the track record of, I have actually tested this 100 times or 50 times, and it is in fact profitable. It's a lot of work, and it's really annoying to do that without changing or wiggling your rules at all. But when you do get in the habit of that, that's the quickest way to at least eliminate a bad strategy from your repertoire if it doesn't work. And you can throw it in the trash or change it completely and start over. So that's how we're trading here with this par indicator and my Astronaut indicator that we're about to publish in the private Discord as well, where in this example, oh yeah, I wanted to look at this. We'll do this right before we wrap up here.
Okay.
This is ENA, and it pumped, how many percentage did it pump off the lows? It pumped 25% at least. And I wanted to look back and see what we got in terms of a indication of a trade. 36 from the low.
Yeah, and I'm looking at the hourly. So from the low from I don't know, a couple days ago. Let me tell you exactly. I'm looking at the low.
So
from
yeah,
October 10th.
This probably gave a signal here, right? Because this is when you've got all the, no, did it have? It might not have given a par signal for oversold. But the thing is, ENA's been on my watch list for months because I know that it is a potential pump and dump scheme coin because there are big players behind it, supporting it. So I missed this trade, even though I've been watching this coin for a while. But we can see that it did give, oh, there's my old squeeze box. Oh no, that's the same thing that I drew just now. It is a squeeze box though, look at that. There is some liquidity in that squeeze. But it just squeezed all the way down, squeeze, 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 bearish, bearish. But then it got way far away. It dropped into this liquidity and then popped back up. That right there, if I was checking this thing every day, that zap back up in above this level, that should have been my go time
And that
signal.
looks like an ABC.
Because what happened is,
that looks like a consolidation, manipulation, and distribution.
yeah, absolutely. That's the manipulation right there, grabbing all that liquidity. Let's pull up the volume. I guarantee you there's a bit, yeah, see that? All these traders capitulated here. Let's zoom in on this low. You got some capitulation at that low. And then you got some buying. So that's the manipulation right there. And you can see this level was really strong. And price got right back above it and then just kept on respecting this level. I was foolish or I was just getting cute, and I was like, okay, I put my entry like right below or right at this fair value gap or something. I was like, it's got to dip down one more time, and because you got these lows over here. I was like, it's got to dip down one more time. So I had my entry right down here. I should have seen this squeeze fire in the up direction, and I should have gotten in at the break of one of these candles. This candle didn't get broken, so then I should have got an entry there. But let's zoom in on this. Even if it had been at this, once this squeeze fires fully, then you get in at the break of a high of the candle, which that high wasn't broken, so there's that. But then you put your stop loss below a recent low, and you're at a 10 risk reward ratio to the top of that. So obviously you can take as many risk reward ratio risk factors as you want in profit. But that would have been it. And then also, as we were talking about earlier, what I also do is I go to that low and I say, hey, I'm going to add to this trade if it gets back into discount. Because these are kind of like moon pump, sketchy trades. So you might only put half a position of risk, half a risk factor, or a third of a risk factor on at this level. And then you go and say, all right, I'm going to add if it gets down to the golden pocket somewhere down here. And sure enough, now you're at a 617 risk reward ratio if you give yourself that low to the top of this pump. And that's the thing I like about the squeeze is that you get in if it goes in your direction. It does not always give you a retracement. In fact, that's the whole point of a squeeze, is that when it fires, it should move straight in that direction. So most of the time you should be expecting price to just go and head up, and that's why you're getting in. But when you do get a retracement, you get an incredible risk reward ratio.
This is also a low volume, low market cap coin. So
yeah, ENA is early, and if you don't have some on spot, just like throw $10 at it or $100 at it. It should be in your spot bag for like, hold it for a month, 2 months, 6 months, a year. I don't know, but you should have some in your spot bag and limit orders set to sell at like 100, 200% gains or something. Not financial advice, obviously, but that's. And then, I was going to check and see if the par indicator gave a nice divergence here at this low. This spike, I think this is partly why I wasn't just aping into a trade yet, because this low didn't really have a divergence aside from way back here. You've got this low here, and then you've got a bullish divergence there to there. But I was like, this kind of spans too much time. I don't know if it counts. I should have said, yeah, that counts. And just gotten in anywhere around there. But that's that.
It's
so that's how we're.
Did you want to button up with a little bit more about the indicator, or
par or my indicator?
yours?
Yeah. So this is where we are right now, and
You want to do like a fresh
this is
chart
what I'm
with just the indicator by itself, because there's so much noise on
yeah.
there.
Well, let me pull up another one. Let's go to our most recent oversold. The market's been pumping, so we've got a few days of no coins in the oversold zone. Wow. All right. AXL keeps showing up on our alert, so I'm going to look for it. It's probably a short. but it's been showing up for a while. So we might have a good signal by now. Oh, I gotta get back. Where's my button to go to the present? Oh, yep, sure enough, there it goes. Bam. So AXL pumped. And hey, look at that. I see a squeeze. The problem with taking these squeezes, like I'm not going to take this squeeze, I'll be honest, because the EMA, the moving averages are all still bearish except for the one green one here. That's my secret moving average that you got to get the indicator if you want that. But this is not giving me a long, and I'm just like, you know what? I'm okay with shorting it when it gets to the high.
Do you want to just real quick?
But now we're
explain a few things that you see on that indicator. Go ahead and minimize the par. And then, and then just so people know what they're looking at.
Yeah, I think Nero ETH is a good one. It's been on our alert for a while too. Yeah, Nero and Nero. Keep seeing that one pop up on our alert. So we are getting alerts on these, and we know that these coins are scam coins. Like, this is a known fact that there's somebody pump and dumping them. So we've got no excuse to not be watching this coin for a crazy, crazy trade. And sure enough, you can see this thing's been just jamming. But here's what we're looking for on my indicator. And that is, oh, that's an ugly squeeze. Look at that. This is a great manipulation situation where, yeah, looking at the par, you gotta, oh, that is dirty. Look at that. It gives you this nasty little bullish divergence right there. And then this, okay, so the orange is a representation of squeeze pressure. And when it gets really tight like that, you know that it's going to fire in a big move, because it means that not only is price action dead, but if it's compressing as it goes on, it's squeezing, and in this case it liquidates some weak hands before it gets to its firing point. But that point of when it moves out of that range, the squeeze ends, and you're off to the races. And the problem is, you might see this and go like, well, my moving averages are still bearish. I don't know. And maybe I'll wait till it gets up above this level. So you should be watching these coins to say, hey, yeah, I want to wait. I missed the move. If you didn't get in down here, you might feel scared to get in right here when it's could get slapped hard by this moving average. So you say, okay, I'm going to wait till it breaks above the moving average, gives me a strong break, and then, son of a gun, you get a retrace back 50%. Almost gets down to the golden pocket. I would have probably put an additional entry here at the golden pocket to test this resistance again, but it just nukes. It just tests off to the moon there. So that's the basic premise of trading on a squeeze situation. You're generally looking for, let's look back in time. You're preferably looking for a squeeze that happens after all the moving averages first flip in your favor. And we probably will see that if we look for a short back here. There we go. It squeezes and then dumps back through the moving average, squeezes again as these moving averages are crashing. You could have taken a chance and gotten in here. But then even as this moving average is flipping bearish, there's the red arrow. I just added that the other day. And then you've also got these purple dots for the adaptive moving average here, going up and down. I need to
And those
dial
signify
this in a
crossovers.
little bit more. Yeah, those are crossovers. I'm still dialing in the exact settings of this blue one right there. But basically, the blue one is just a stop loss, in my opinion. So, for example, if you got into the trade around here, based on these the EMAs flipping and based on this moving average being red, if you got in there and that squeeze fires, you would put your stop loss above that high, or you give it this high, and then you would trade until the EMA price crosses this EMA right around here. So that's giving you a 2.5 or 2.7 risk reward ratio. And you can also take profits. At my general recommendation, if you're on a really perfect squeeze, is to go all the way to a 4.0 risk reward ratio, which, as far as strategies go, that's pretty dang substantial to say that on average you can. Oh, look at this. Oh, what do we have here, ladies and gentlemen? Oh, that is sweet. So this is a classic example of the crypto cartel doing their pump and dump scam scheme, where it's just rocketing to the moon. So big, really tight squeeze right before the moving averages flip, and then it just launches up with these spikes in volume. Then sure enough, you get entries on retracements. You could have gotten in at the 50% of that one. You could have gotten in at the golden pocket of that one. And at the golden pocket of this one, you get another one. And at that point, you're definitely, I mean, it'd be scary to get in on this candle close. Get the break of that. But your stop loss goes below that low. What are you targeting? Oh no, that's a short. Womp womp. Draw me along. Yes, we do get a 4.0. Look at that. So, this is a combination of a bunch of very standard tools. The squeeze is a traditional indicator. It was proven to be used by John F. Carter on $1 million Tesla trade, or two of them, I believe. The basic concept of the squeeze. And then I'm using moving averages and also the visual shape of the squeeze, which is a unique thing that I'm adding to the traditional method. Based on the shape of the squeeze, when you see this
shape looks like a whale.
Yeah, you got a whale right there, and you got maybe a dolphin or a whale right there. Then that's your signal. Time to get on board. So, yep, there's the whale taking a dive. I should make these dark blue or something just for fun. But yeah.
And the other one looks like a shark. That was interesting. It looked like a shark diving.
Yeah. That's a great white shark there.
All right, well, we'll do a proper tutorial once the indicator is released. I just wanted to give a little... Yeah,
I've been recording tutorials on how to set up this indicator, how to use it, the exact details of entry and exit, and I'm really excited to get it for our Discord members to use. It'll be an invite-only script.
So if you go to
Look at that. There you go.
www.cartoonmoneyprinters.com, click the Start Now button. You can have 90 days free access. And do you think that this indicator will be out within the 90 days?
Yeah, I'm working on getting it out. Did we want to have it out this weekend or next week? It's basically ironed out all the details. I'm just deciding on a couple more settings, and then we're good to go.
Let's do next week.
But yeah, look at this one right here. You probably got a lot of people not being very hesitant to long this high, but when you've got a squeeze and all of your indicators are aiming upward, look at that.
Boom. 4.0.
Most likely. 5.0.
Ooh,
Yeah.
5.0.
This is the kind of situation where when the moving averages are already stretched out like this is where I'm adding to a long I already have. So your average entry price needs to be way down here, and then you're just adding a little bit more, and you're putting what is effectively a take profit at this low here, and then you're just targeting some more profits up here. But that's the crazy thing, is if your average entry price is way down here, adding to it up here, just taking profits on a 1-to-1 or a 2, you're making so much more money because your average entry is way down here.
They call that.
So that's why
we discovered that today in chat. We called it the long pyramid.
the long pyramid.
Or you're pyramiding into a long. So you'll pyramid into a trade by adding into it, even though you're in a profit.
Oh yeah, I love the squeeze for that because it really gives you that confirmation. I've seen this so many times. There's tons of examples of it on the pumping coins that are going crazy lately, where oh yeah, Popcat. Let's look at one more before we wrap up. This is one of the memes that's been on our radar. Everybody should know about it. Yeah, you should have no excuse for not checking this coin every day. Anytime it's on Binance,
I prefer it too.
you gotta know that there is somebody doing some manipulation. Look at this, ding, ding, ding. It's just jumping up. Let me check the 1 hour. I don't remember when this thing. Yeah, so this thing has been going. Check the 4 hour. Oh, good Lord. Look at that. Wow. Oh, that's weird. Look at the my moving averages get all wonky at the beginning of a chart. That's interesting.
It literally.
But it's giving you signals. It's giving you signals on this. Here's